Hello and welcome to Black Farms TV. We are so excited about this series that we're having. We're talking about everything that you will need. You can always go back to our television set, blackbombs.tv, and do a search. Today we'll be talking about life insurance. We want to understand all the different types of life insurance, temporary and permanent, and what is it that you need. How is life insurance used as a financial or an estate planning tool? So today we will be talking to our friend and our friends from Mass Mutual. They've been really good to Black Palms TV. And so we are talking with Fajolu, Mrs. Toyin Fajolu, financial services professional today. She, as you can see, we're in her office. So she has all the information for you. So stay tuned. Toyin, how are you?
Fine, Non. Nice to see you, Noni. I'm happy to be here. I'm honored that today you came to our office. Welcome.
Yeah, we have to, because you guys even sponsored Pearls of Wisdom for us.
Yes.
And it was an amazing time. I don't know if you recollect, that was last year.
Yes, I did. It was well attended, and we still up to today talk about the ladies that came to the event.
To the event, yeah. Our sassy ladies. Very beautiful ladies. So, Toyin, can you start by telling us what a financial services professional is?
Financial service professional means that we deal with individuals,
Okay.
we deal with families,
Okay.
we deal with companies.
Okay.
We're concerned about their financial future.
Okay.
Because now that you are working, and what do you do with your money?
Okay.
So we are really interested in providing financial stability for families.
For families. So you're not just selling life insurance, you're doing all other kinds of
Yes,
services.
it's a comprehensive financial service. So when you're talking about insurance, we're talking
Okay.
about college planning, we're talking about estate planning,
Okay.
we're talking about business succession,
Oh.
we're talking about retirement.
Oh. So we'll touch each and every one of those at a different time. Today we want to focus on life insurance. Because what you hear when most people talk about life insurance, all they talk about is term life insurance, right? But there are actually a broad spectrum of life insurances. So tell me, what is a basic term life insurance?
Before we go on, Lonnie, term insurance or insurance in general is just saying that you care about your family.
Okay.
You care about your loved ones, your wife, your spouse, your kids, your parents.
Yes.
So insurance is not a bad word. And it's life insurance. I always tell people it's not vet insurance.
Oh,
So
okay.
because many people, when they have insurance, they want to run away.
Yes.
But they say, no, you have to embrace it because it's life. And you mentioned term insurance. Term insurance means temporary insurance.
Right.
That is insurance that's supposed to be used for a particular time,
Yeah,
maybe
right.
10 years, 20 years. It's not permanent. It's not going to be there when you need
Right.
it.
So there's a term which normally you have, some people have 10, 15, 20 or 30 year. And at the end of that, so it's kind of like your auto insurance. When you stop paying, that disappears.
Yes.
Correct?
Yes.
Good. Okay. So, but there's also other types of term insurance, like, like the ones that you renew every year.
Yes. Most term insurance are called renewable term. That means
Renewable term,
every
yeah.
year you're going to renew. Why? Because every year your age is going to increase and your age might have changed.
Right, but some of them
But-
are fixed. So it's
Yeah.
fixed so that, if you have like a 30-year term, you have the same fixed premium for the 30 years. Whereas if you have the yearly renewal, it changes every year
Yes,
based on
depending
your age.
on how it's set up. So
Okay.
when you go into term insurance, you
Okay.
really want to sit down with a professional like us and explain that this is what you are doing. It's
Okay.
going to change or not change depending
Okay.
on the setup.
Okay. And when is a good time to buy term insurance?
Term insurance is used for different purposes
Right.
that many people don't know. Most term insurance you will acquire or have it when you are working in your working years.
Okay.
Most of the time it's used as an incentive for you to join a company.
Well, let's not talk about the one that company sponsors. Just every other person, whether you're self-employed or even if you're a student and you want to buy a term insurance.
Insurance, I told you earlier on, is showing that you care. You love your loved ones.
Or you want to be buried well, right?
Yeah, you want to be very well. It's the same thing.
Yes.
But we want to ask you, why do you want to buy insurance? We say, oh, yeah, because I have a wife, I have a
Okay.
kid, you know, if anything happens to me, I want to be able to send my kids to college. I
Yes.
want my wife to be able to live in a house.
Right.
And we said, okay, what's your mortgage now? Which
Okay.
school do you want your college? Is it private college? And we said, we look at everything, we add it up. And if it comes to 500,000,
Okay.
1 million, that is how we start.
Okay.
And we say now, this is, if you want term insurance, this is the cheapest you can get.
Okay.
But for 20 years, this is it. So that's how we determine it sometimes. We
Okay.
look at what is your goal and objective.
So when you know what your goals and objectives are, but what I'm trying to get to is, you know, when you're 50 years old, what is preferable? Is it a term insurance or is it something that is not term?
When you're 50-year-old, you know, when you come to me, you're 50-year-old, I believe that your children must have finished college or almost finished college.
Okay.
Your mortgage that you've had for 3 years,
Yes.
you have almost, you know, finished paying it. So
Okay.
what is the purpose of buying the insurance?
Okay.
I will ask you. Then you will say, oh, this is why I want to buy the insurance for my grandchildren, or like you said, I want to be buried well.
Yes.
Or you know, and I'll tell you, okay, there are other alternatives. Now that you are your 50,
Okay.
mortgage is gone, college is gone,
Hopefully.
you're fully. I will
mortgage is
ask you
gone,
if you
college
are
is
working
gone.
or do
It
you have.
depends. It depends.
It
Most
depends.
people are 50 and their kids are in college.
Yes,
Right?
that's true.
So-
So if they're still there, they will ask them that, okay, how many years left for them for college? I will look at I have to get a value. They say, okay, this is the school they go to, this is how much they will need. I say, okay, all right, you can buy a good life insurance. At 50, your time is going very, very expensive because more time insurance is better when you are younger.
Well, that's true also, but that's what I've heard, that term insurance is better when you're younger. But on the other hand, if you're 30 years old and you buy a 20-year term insurance, at the end of 20, you're 50, and you still have your full life ahead of you, then is it really better to buy?
It's not better because at the end of the day, term insurance is more expensive than
The older you get.
good insurance. Because now that you are 50, now you are beginning to think about where you are going.
Okay.
And you want to go and buy another term
Yeah.
that will take you another 20 or 30 years.
Yes.
Now you see that, oh, all those 20 years is gone. Now, so term insurance is a very expensive insurance, and we don't encourage people to buy it.
Well, I think that it depends on what their financial outlook is and what they need it for, right? For some people, because term insurance is generally cheaper than permanent insurance. So for some people, it might make sense to have that or maybe have a combo.
That's good, Noni. It's good for them. That's when we look at your circumstances, we look at your objective and your goal.
Okay.
And we find that okay, Mr. and Mrs. White, you will need about 1 million coverage based on your house, based on the colleges your children will go to. You need 1 million coverage. And we ask us, what is the term? This is the best. And so the premium is too expensive. I can't afford that.
Yes.
Okay, we will do you a term. We do a term for 20 years because
Mhm.
by 20 or 30 years, you will have finished paying your mortgage.
Yes.
Your children will have graduated from colleges. And also, at the same time, we ask you to buy a small whole life insurance.
Okay, so hold that thought because we're going to go into talking about whole life insurance. So in summary, term life insurance, it expires at a certain time. If you don't pay, it's over. You can pay it for 20 years and then you're done.
Yes.
You lose your debt benefit, right? As opposed to whole life. So term is kind of temporary, even though it's not really called temporary out there, but that's what it is, correct?
Yes, yes.
Okay. So right now we're going to break and then we'll come back and we'll talk about whole life insurance and the rest of them.
Okay.
Welcome. Thank you. We are back. We had to, they paid for their commercials and their time has run out, so we had to stop that. So, Toyin, we are beginning to talk about whole life insurance, correct? So, in a nutshell, tell our audience what a whole life insurance is.
A whole life insurance, like you
Actually, let me take it back. A permanent insurance.
Yeah. Permanent insurance means that it's going to be there
Okay.
where you need it.
Yes.
Temporary insurance is not going to be there when you need it.
Okay.
Then you become scared, want to buy another term insurance.
Okay.
Whole life is going to be there when you need it.
Okay.
Let's say you live to your 80s, 90s, the insurance will still be there. It's very difficult to find a term insurance that you will have in your 70s, 80s, 90s, And because of the advancement in health services, people are living longer and longer. So it's a permanent insurance. That means when you need it, when you pass away or when you are living, you need some benefit to be there for you.
But there's still some term insurance, correct, that you can still get, but it's probably what do you guys call it, like burial insurance, like expenses, like $10,000, even when you're 70, 80.
Yes, that's
there are some companies that still write those insurance.
We do write something like that. Okay. Final expense insurance. Okay. It's the maximum you can get is 25,000.
25,000.
Yeah.
Okay.
Final expense, no medical question is asked, you can get that. That's what we call that. Okay. But if you have a good life insurance, you don't need the final expense insurance. Yeah.
But it's something that somebody might consider having. At the minimum, you should have that. So especially if you're Nigerian and you want to be buried back home, so that when something happens to you, there'll still be enough funds to send you back.
Yeah, Nani, again, thank you so much. This is what we have found out in our community, that many people are dying young. Yeah. And there's nothing, there's no life insurance. That is sad for the family. Yeah. Now the burden is passed to their relatives or to their village people or town people. If they have had, like you said, the minimum, yes, final expense insurance, and keep it. If anything happens, it will still be there. That means that you pay the premium till you pass away. Yes. That is it.
Well, they came up with a different type of insurance where you go to all this wake keeping. So if something happens to you, they contribute back. But anyway, that's besides the point. So we talked about the permanent insurance. And when we talk about permanent insurance, there's a whole life and there's universal life. Right. So explain what the difference is between whole life and universal, and there's all the types that we have to talk about. Yes. So that we can know which one is better for you, because each insurance will be different for different people, right? Yeah.
Like I said, a whole life insurance generally is showing that you care for your loved ones. Okay. And whole life insurance is going to be there. The beauty of whole life insurance is that it has a lot of guarantees. That means that the death benefit is guaranteed. Okay. The cash value is guaranteed. Okay. Your premium is guaranteed. That means tomorrow we're not going to tell you increase your premium. Okay. So that is the beauty. And everybody that is working should try to have.
So the whole life actually has two components to it. It has the debt policy component, and then it has a cash value component. Yes. What's a cash value?
Cash value is when you buy your policy, it continues to increase. And the cash value is what we call the living benefit of your policy. Okay. So whole life insurance is not just for debt purposes. Yes. It has a lot of benefit. Like when you retire, you need money, you can take your cash back, or you can even take a loan on the cash value. Okay. Or sometimes it will decrease your debt benefit, but there will still be something there. So the cash value.
So what do you mean decrease your debt benefit? Isn't your debt benefit guaranteed under a whole life policy?
It's guaranteed, but now you want to take some cash out.
But aren't you taking the cash out of the buildup of your cash value?
But is related to the debt benefit.
Okay.
So let's say you buy, the beauty of whole life also is that you can stop paying after 10 years. So it's not that whole life, that means I have to pay my premium for a long time. No. Right. We can design it for you that you say, okay, I want to pay premium for just 10 years and you are done. Right. But your insurance is still in force. Yes. Whereas for temporary insurance, called term insurance, after paying for 10 years, it is gone.
It is gone, but then again, the premiums are very different, right? Because the term insurance is usually cheaper. I think the purpose of the whole life insurance, like you were saying, is because it also has this cash value component. Yes. So in a way, you're paying for your debt policy, and then you're also accumulating wealth, sort of.
Yes. And I said that with that wealth that you're accumulating, I want to give an example. Okay. I said you can pay a whole life for 10 years and you're done. You can pay for 20 years and you're done. Okay. Or you can pay it for more some years. And with the whole life, even if you buy it and say after 2 years, I don't want this insurance anymore. Okay. You're not going to lose it. You're not going to lapse. We just stop it at that time. And if you stop it at 2 years, you can leave it forever for another 80 years. You see how that thing will have compounded and compounded. So it's not something. It's something that is good.
Right.
Even if you don't have the money now, you
Okay.
can pay for some years and say, "Oh, I'm done with insurance." Maybe because you lost your job or
Yeah.
because
And it will you keep building.
keep building.
Okay.
So the cash value there continues to grow. There is what is called guarantee. If you buy a life insurance, we guarantee you 4%. But when the non-guarantee, when we had it,
Well, you're not you're guaranteeing the 4% on the cash value.
no, we guarantee you that everything happens. You see, this is a mutual company. Mass Mutual is a mutual company.
Okay, so she's being specific to her company.
No,
I'm talking generally.
Yes, generally. There are two types of
Okay,
insurance
yes,
companies.
yes.
We have mutual companies.
And I was going to ask you that. So,
and we have stock companies.
Okay.
Stock companies, when they make profit, the profit does not go to the chair or to the policy owner. It
Okay.
goes to and they are listed in the stock market.
okay.
For us, we are not listed in the stock market. Why? Because we function for the policy owner. So at the end of the year, when we have profit, dividend, we give it to the shareholder. So at the end of the day, even your cash value, the rate of interest is about 7.1, 7.2. And this has been sold for a very long time.
Yes.
It's not linked to the stock market. And when you start beginning to talk about variable insurance and universal go model, the universal insurance is almost similar.
Well, universal is similar to the whole life insurance.